TradingView actually has a built-in tool that will allow us to do it. So you're going to click right here where you see all these different positions, and you're going to click a long position for the sake of this example. Long is just another word for buy. So this would be a buy position, meaning you are buying something. Therefore, you're expecting the price to go up. Your risk to reward calculation is very simple. This number right here is your reward multiple. So this is how much you will make if the trade goes in your favor. It's not a dollar amount, but it's actually a multiple. So if this trade goes right and I am risking $1, I would make $3 back, giving me a 3x return on my risk. So you can see right here, the dollar amount I am risking right here is $845. So that's my risk. And then my reward, if this trade goes right, is $2,629, which is just taking this number and timesing it by this number right here. Personally, I like to target a risk to reward ratio on all of my trades of around 1 to 3 or even 1 to 4. Your risk to reward might be a lot higher. It also might be a lot lower. That's okay. If you have a lower risk to reward, let's say your risk to reward is 1 to 1, this means you need to have a higher win rate. Whereas if you have a super high risk to reward, maybe you're risking $1 to get $10 back, this means that you can actually have a low win rate. The thing that most beginner traders mess up is they don't have consistent risk amounts. The most successful traders, including myself, risk the same amount on every single trade, no more, no less. This consistency is crucial because it helps you avoid big swings and big losses in your account. If you risk too much on one trade but not enough on the next trade, you're going to end up with super unpredictable results. Instead, focus on risking a fixed percent of your account on each trade. This way, you can achieve predictable outcomes and actually grow your account. You always need to be tracking your win rate. Knowing your win rate, along with having an idea of your average risk-to-reward ratio, will give you a clear idea on what you need to do to achieve profitability. For example, if your win rate is 60% and your average risk-to-reward is 1 to 3, you have yourself a very profitable strategy. But if you only win 30% of the time and your risk-to-reward is 1 to 1, it's time to go back to the drawing board. To determine your win rate, you need to take a lot of trades, like 100 trades, and even that isn't a great sample size. You need to have enough data to determine what your win rate is over a good amount of time. I like to take 250 trades with whatever strategy I am using to determine the win rate of that strategy. And I like to backtest my strategy over years of data to make sure that it actually works in all different market conditions. You should be journaling after every trade and talking about why you lost the trade or why you won the trade and what you're going to do differently next time. This will give you enough data to know what's working and what's not working. You should just be marking down whether you won or whether you lost the trade so that you can have some data to go off of to determine your win rate. The more you use risk management, the better you're going to execute your strategy because you'll have the confidence that the data actually supports this strategy being profitable.